In the intricate landscape of modern economics, few subjects spark as much debate and inquiry as monetary policy and the essential role that precious metals, especially gold and silver, play within our financial systems. A particularly telling moment in a recent discussion revolved around the Federal Reserve's Fed role in setting interest rates, which are vital components of our monetary policy framework. When engaging in a dialogue about the Fed's responsibilities, I found myself questioning the implications of interest rate controls and whether such mechanisms could be viewed as a form of price control. The person I was conversing with vehemently denied believing in price controls, which sparked a deeper inquiry about the nature of interest rates and their overarching impact on our economy. If the Fed has the authority to control interest rates, then isn't it inherently controlling prices? This question encapsulates a fundamental paradox in economic theory. Interest rates, set by the Fed, dictate the cost of borrowing money, which in turn influences consumer behavior and spending patterns, thereby affecting prices throughout the economy. For instance, when the Fed lowers interest rates, borrowing becomes more affordable. This encourages businesses to invest more and consumers to increase their spending, which can lead to rising prices as demand begins to outpace supply. On the contrary, when interest rates are raised, borrowing costs increase, leading to a cooling of consumer spending and a potential slowdown in inflation. Hence, while the Fed may not control prices in the same manner that traditional price controls operate, their actions significantly influence price dynamics across various sectors of the economy, illuminating the complex relationship between interest rates and inflation. This contradiction is not merely an isolated incident but a broader reflection of misunderstandings that permeate discussions around economic theory. Many proponents of gold and silver, often referred to as gold bugs, struggle to fully grasp the critical point that these metals are not just historical artifacts, but are integral to understanding contemporary monetary systems. They frequently assert that gold has always served as money, failing to recognize that its value is not a relic of the past, but remains highly relevant today. Each time a dollar is exchanged in the economy, it is tied to its gold equivalent, even if this connection is not overtly acknowledged in everyday transactions. This understanding underscores the necessity of viewing gold and silver not as outdated commodities, but as crucial elements of our current economic framework. To illustrate this critical point, consider the performance of gold against the dollar since 1971, the pivotal year when the United States fully abandoned the gold standard. Since that time, gold has consistently outperformed the dollar, a phenomenon that highlights the waning purchasing power of fiat currency. In 1971, gold was valued at approximately $40 per ounce. Today, it has surged to over $1,900 per ounce. This stark contrast illustrates that holding gold during this period would have yielded substantially greater wealth than retaining cash, which has steadily depreciated due to inflation and monetary policy mismanagement. This observation reinforces the importance of understanding gold and silver as enduring stores of value, crucial for individuals looking to protect their wealth amidst economic uncertainty. Understanding the concept of hyperinflation is essential for grasping the stakes involved in our current monetary system. Hyperinflation occurs when a currency loses its value at an alarming rate, leading to severe economic instability and social upheaval. The moment when the gold exchange rate with the dollar reaches infinity would signify a catastrophic failure of our monetary system, plunging the economy into hyperinflation. This scenario is not merely theoretical, it represents a very real risk if we continue down our current path of excessive money printing and unchecked debt accumulation. Many individuals grapple with the implications of this reality, fearing that acknowledging the looming collapse would necessitate a re-evaluation of their financial strategies and beliefs. Gold and silver embody more than just investments, they represent fundamental truths about the nature of money itself. Gold, by definition, serves as the benchmark for what a dollar is intended to represent: a tangible, enduring store of value. In an inflated market, buying gold today may seem counterintuitive, but it is essentially a strategic move to acquire a substitute for what will inevitably be restored purchasing power. As the substitute collapses, all economic power must revert back to its original form: gold and silver. Historical precedents abound where societies have reverted to these precious metals during times of economic crisis, reinforcing their enduring significance as reliable mediums of exchange and stores of value. The historical context is crucial. When monetary systems collapse, economies do not simply cease to exist. Instead, they undergo significant restructuring. We are likely approaching a pivotal moment in our economic history, one that may not signal doom for humanity, but will undoubtedly usher in unprecedented economic disruption. The breakdown of our current monetary system appears imminent, but this does not equate to an end of civilization as we know it. Instead, it may lead to the most profound economic upheaval the world has ever witnessed, but out of chaos often emerges a new order. The aftermath of such disruptions is where we will see pockets of new economic activity emerge. After the fall of great empires, such as the Roman Empire, communities began to rebuild using the resources at hand, and this principle will likely apply to our situation as well. Following a significant economic collapse, we will likely witness a similar resurgence of local economies centered around the honest exchange of goods, with gold and silver serving as their foundational currencies. This shift may also foster innovation as communities devise new methods for facilitating trade and establishing value systems based on tangible assets rather than speculative fiat currencies. It is essential to consider the future of international trade in light of these dynamics. The current state of global trade is precarious at best, with rising tensions between major economies and a growing sense of instability in financial markets. As we look ahead, the potential for countries to band together to create trade agreements based on gold becomes more plausible. While this idea may seem theoretical, the prospect of nations establishing a gold-backed currency is a real possibility that could undermine the dollar's long-standing dominance. However, the success of such initiatives hinges on the integrity and transparency of the participating nations, as trust in any currency backed by gold relies heavily on the assurance that it can be redeemed for its physical counterpart, an assurance that many governments may struggle to provide. As we examine the trajectory of the dollar, it becomes apparent that its eventual decline is not a question of if, but when. The dollar is not merely a piece of paper, it represents the other side of the assets held on the Federal Reserve's balance sheet. These assets, predominantly composed of treasuries and mortgage-backed securities, are increasingly vulnerable to systemic risks. While treasuries may avoid outright default due to the likelihood of raising the debt ceiling to accommodate repayments, mortgage-backed securities face greater exposure to defaults. If widespread defaults occur, it could trigger a massive deflationary spiral, erasing dollars from circulation. Such a chain reaction would prompt the Fed to print more money to replace the lost value, resulting in price increases across various sectors, particularly in retail, as consumers experience the immediate impact of monetary policy failures. Moreover, the current economic landscape is rife with uncertainty. The potential for defaults on mortgages could lead to falling housing prices and banking crises, further compounding the challenges we face. In such scenarios, we might witness a significant shift in the balance of power as the Fed's balance sheet expands rapidly to cover losses, resulting in a collapse of the dollar's value. As this unfolding drama occurs, individuals and businesses will likely seek to protect their wealth by turning to alternative stores of value, such as gold and silver, as they navigate the treacherous waters of economic change. When contemplating the broader implications of these economic shifts, it becomes clear that the landscape will not simply revert to a previous norm. Instead, we are poised to see a shift towards a more decentralized economic structure. This transition will be characterized by the rise of regional economies that prioritize honesty and transparency in financial exchanges. As communities begin to rely less on centralized institutions and more on local resources and currencies, we may witness a resurgence of barter systems, where goods and services are exchanged directly for precious metals, thereby sidestepping the pitfalls of fiat currency instability. Ultimately, the future of our monetary system hinges not on centralized planning, but on organic growth and adaptation. As history has repeatedly demonstrated, the emergence of gold standards did not result from orchestrated efforts by international organizations. Instead, it evolved organically as countries recognized the inherent utility of gold as a medium of exchange and store of value. This historical precedent suggests that any new monetary system will arise from the ground up, driven by the inherent need for stability and trust in economic transactions. The movement towards a gold-backed system may not be immediate, but the groundwork is being laid by individuals and communities who grasp the value of tangible assets in an increasingly uncertain economic climate. In conclusion, the path forward must embrace the lessons of the past while acknowledging the realities of the present. Gold and silver are not relics of a bygone era. They are essential components of any viable monetary system. As we navigate the turbulent waters of economic change, it is imperative that we recognize the enduring value of these metals as critical tools for wealth preservation and economic stability. The next economic landscape will be built on the foundations of honesty and integrity, utilizing gold and silver as the bedrock of exchange. As we prepare for these changes, let us remember that while disruption is inevitable, it also presents an opportunity for renewal and growth. The potential for a resurgence in gold and silver as monetary standards will likely bring about a paradigm shift in how we view wealth and value in society. This transition, although fraught with challenges, may ultimately pave the way for a more stable and equitable economic future. As confidence in fiat currencies wanes, we must remain vigilant and adaptable, ready to embrace new opportunities that arise from the ashes of the old system. The time to understand and integrate gold and silver into our financial consciousness is now. The future of our economy may very well depend on it. The road ahead is undeniably complex and laden with uncertainty, but the lessons of history guide us. As economies evolve, the principles of sound money anchored in gold and silver will emerge as pivotal in navigating the turbulence of change. Communities that prioritize integrity, transparency, and trust will be better equipped to foster resilient economic systems, ensuring that individuals are not merely passive participants in a system, but active stewards of their financial futures. As we embrace this new economic paradigm, it becomes increasingly important to educate ourselves and others about the role of gold and silver. Financial literacy will be crucial in empowering individuals to make informed decisions about their wealth and investments. This education will also pave the way for a cultural shift, where the understanding of money transcends beyond mere currency to encompass the timeless value of precious metals. Moreover, the potential for innovative solutions that integrate technology with gold and silver cannot be overstated. As we venture into the future, digital currencies backed by precious metals may very well redefine our understanding of money and trade. Blockchain technology, for example, could facilitate secure and transparent transactions involving gold and silver, ensuring that their intrinsic value is preserved and enhanced in a digital economy. In a world where economic fluctuations are inevitable, the resilience afforded by tangible assets like gold and silver offers a beacon of stability. As individuals and communities increasingly recognize this truth, we may witness a resurgence of interest in these precious metals, not merely as investment vehicles, but as essential components of a robust and sustainable monetary system. Ultimately, the interplay between monetary policy, interest rates, and the value of gold and silver underscores the need for a comprehensive understanding of economics. By grappling with these concepts, we can better prepare for the inevitable changes that lie ahead. The economic landscape is shifting, and as stewards of our financial futures, we must remain adaptable, informed, and vigilant. Only then can we navigate the complexities of the monetary system and emerge on the other side, equipped with the knowledge and tools necessary to thrive in an uncertain world. As we stand at the precipice of this economic transformation, let us commit to fostering a new understanding of wealth that honors the lessons of the past while embracing the possibilities of the future. Gold and silver are not merely relics, they are the keys to unlocking a more resilient and equitable economic order. By recognizing their enduring value and relevance, we can lay the groundwork for a future that prioritizes stability, integrity, and prosperity for all. In this journey toward a new economic landscape, the role of gold and silver will undoubtedly remain central. The convergence of history, economics, and human behavior will shape our path forward, allowing us to harness the lessons of the past to inform our actions in the present and future. The time for change is upon us, and as we embrace the possibilities that lie ahead, let us do so with the confidence that gold and silver will continue to play a crucial role in defining the value of money for generations to come.